discuss systematic risk, what it is, the main types of it. So to start off with, systematic risk is the risk, or systemic is the risk of the, of essentially of the whole system, right? So that's something that you cannot control. You cannot diversify out. You cannot diversify away from them, right? So all portfolios are going to be affected. I'm not going to say equally because, people could have like tips and stuff like that are protected. But just think about, it's something that you really can't control, right? You really can't control. You could always say, oh, you could just not invest in this whole category, like not fixed income, but it's not really a good way of looking at it. So let's discuss that. There's a common acronym called PRIME. So that's going to be purchasing power, reinvestment, interest rate risk, market risk, and exchange rate risk. So P, purchasing power, inflation. Everyone's going to be affected by inflation risk, some folks more than others. So common stocks, generally the best hedge against inflation risk long term. Gold's a pretty good one for short term. Hard assets, real estate, that's a good hedge. Commodities, short term. If you noticed, I think it was 2022 when we had a big bout of inflation. Real estate went up tremendously. Gold's still going up because of projected inflation increases as rates are projected to go down. So yes, that's but essentially everyone is affected by it. Yes, people are differently affected by it, but everyone's, whatever their return is minus that inflation rate's going to be the real rate of return. So now we move on to reinvestment risk. Reinvestment risk is the risk that, let's say you have fixed income securities, whether they're bonds or preferred stock, you're getting, let's say, 7%, interest rates go down, you take those coupons and dividends and are forced to buy new preferred stock and bonds that pay 5%. That's reinvestment risk. So it's the risk, of interest rates coming down. It's the exact opposite of interest rate risk, which is the risk that interest rates go up. So let's say if you have, bonds and, they're paying 5% and interest rates go up to 7%. Now the value of your bonds went down and you're stuck at that lower rate, right? So and also reinvestment risk, I just want to kind of go back to that. That just ties in right into, for callable bonds, they have reinvestment risk because if interest rates go down, your bonds could also be called away, right? So it's even worse, right? Now, not only is it now the coupons are being reinvested at the low rate, now the principal is being reinvested at the lower rate. So we talked about interest rate risk, right? Interest rates going up, prices coming down of your fixed income securities. Now, and that's actually, even if you have government bonds that are guaranteed and the government could always print the money, you still have that interest rate risk, because if you were to try to sell them early, you might have to sell it for a massive discount to what you bought them for. Now, M is going to be market risk. That's kind of pretty easy. Something bad happens and you have the best stock in the world. If it's ABC stock, it's the top performer. It doesn't matter. The market's going to drag it down with everything else, right? Can't diversify away from that. The only thing you could do is buy like a protective put, an index put, to protect yourself against that. E, exchange rate risk. It's an interesting one because you can argue that, hey, you could just focus on just being in dollars. But even the dollar could get weak. So, essentially it's the risk of, either the dollar weakening or the dollar strengthening. You can argue that one that, hey, maybe you could just not focus on international. You could just be focused domestically. But technically, if you want to be diversified, you do want to have some international holdings as well. So hope that makes sense. Prime, purchasing power, reinvestment, which is inflation, I, interest rate risk, M, market risk, E, exchange rate risk, right? Or currency risk, what people want to call it. So please like and subscribe and listen for more. Thank you. Have a great day.